Hey everybody, so this is my daily ERC Ponce's video. I figured something I haven't talked about very much that really needs to be highlighted is some of the mechanisms about withdrawing a claim from the queue. And why this is relevant is that right now we're in a holding period with the IRS because of the moratorium. And in particular, some of the figures that they released recently with how many employers are in the unacceptable risk level for this program. I figured it's a good thing for me to highlight basically how you would withdraw a claim from that queue if you don't believe that you're eligible for a certain quarter. Now, before you go through the process of actually withdrawing a claim, you need to go through the due diligence work of, is your organization, well, there's two things, right? If you want to just take your hat out of the ring and you're not interested in pursuing a refund that you're legitimately entitled to, you are welcome to do that at any time, right? If you filed for this and you just don't, maybe it's a relatively small claim and you just don't want to deal with any more of the waiting game and you just want to cut your ties and just not deal with it anymore, you can always withdraw a claim, even if it's a legitimate claim, right? You don't have to say that your claim is not legitimate. This is basically a process to request that they just don't process the return. So that's always an option. If you're sick of having to deal with this and maybe the money's not worth it to you at this point with the amount of waiting and some of the harsh language that's coming out of the IRS and that sort of thing, you can withdraw a claim. Now, if you're in the position where you don't mind that and you want to continue to pursue it, what I would recommend you do if you're in the pending queue is take a hard look at what was done, right? You want to make sure that you're actually qualifying for the program, and on top of that, that you're able to substantiate what you were qualifying for. And the main mechanisms that you're going to want to look at are basically around eligibility is the big piece, right? Because this withdrawal program is an all or nothing bid, right? So if you're going to withdraw a claim, you're withdrawing a full quarter. So even if you think if there was just a calculation error or something like that, by withdrawing it, you're basically pulling it back out of the queue. I don't know that I would recommend, if somebody's just trying to do an amendment, to file the withdrawal and then file an amendment. I'd be more inclined to just file an additional amendment on the tails of the first one that's done, just because of the issues around the pending tax bill that could retroactively end this program. I would hate to do a withdrawal and then submit another amendment, and then that amendment for the corrected amount gets nixed because of pending legislation. So that's probably how I would do it, but it's a facts and circumstances thing, obviously. So you want to start off with seeing if you're actually eligible for the program to start off with for the quarter that you're looking at. And basically you're going to want to go through the two tests that are available. The first is the gross receipts decline test. The second is from government impacts on your business, showing that you had a more than 10% impact on how your operations were functioning compared to normal business directly due to government restrictions on your operations. So it's very nuanced how you do the testing, but that's where you need to start, is make sure that you're actually eligible for the quarter that you're filing for. And if you find through that process that you're just not eligible for the quarter, so let's say you're not meeting the gross receipts decline test, and then when you go back and you actually look at what was, you look at the government orders that were in place and the language isn't binding, or the person who did the filing did it based on your attestation as a taxpayer, but didn't actually go back and find those restricting government orders, and then when you go to look for them, there's nothing there, and you just find that you're not eligible for that quarter at all, that's when you can utilize this withdrawal program. You can also do it if you didn't deposit your checks yet, which, if you were part of this moratorium process, the checks would have been, I'm recording this in June, probably would have been last summer. So if you're sitting on those checks still, that's probably not hardly anybody listening to this. But let's talk about how if you get to the point where you determine that you're not eligible, or you determine that you just don't want to do this anymore, which is totally legitimate. Like, you don't have to participate in this program. It is an optional thing. You can then withdraw your claim. And so the instructions are it's actually pretty interesting. So if you used a PEO, where they did a batch filing, they must withdraw your claim. But if you're just a normal filer, you file on your own 941X, you don't have to go through the original payroll company that you used in order to withdraw the claim. Any tax professional can help you that does these can help you with withdrawing your claim. And so if and then if you're under audit, it's obviously different. But this is just, you submitted your claim, you're in the queue, you haven't heard from the IRS, your tax professional goes back, finds out that you're not actually eligible because of whatever reason. This is the process you can use to withdraw it. So basically you take a copy of the 941X that was filed, you just write the word withdrawn on the left, you write your name, you sign your name, you date it, and then they give you a place to scan it, to fax it. And then you can fax it to the withdrawal fax line right there. Now, if you don't have a fax machine, which is a lot of people, there are actually free fax services online, which, let's see, I'll show you the one I use. So, you can use a service like this, which is free, to send a fax to the IRS. Now, I would caution though, most of the time this is, there's not sensitive information on this return really, because it's just your name, your address, and your EIN. Now, if you're a sole proprietor who hires people and you don't have an EIN on this and it's a social security number that was getting used, I would not be comfortable using a service like this because I don't know that it's encrypted. But for the most part, I wouldn't be too concerned about this just because there's not anything that sensitive on it. And then they're going to send you a notice if it's accepted or rejected. Another key point here is you may need to amend your income tax return. If you didn't amend your income tax returns for the payback of the additional taxes due to the lost wage deduction that this credit triggers, so if you were waiting to receive your funds in order to file those amended returns, then you're not going to have to, there's no action point here. But if you amended your returns already while waiting for the funds, then you'll need to correct them and make sure that happens soon because you don't want to get whipsawed on the statute of limitations. Also, you want to get your credit rolled forward for, an overpayment of income taxes. But that's basically how you do this. Now, if you have a claim, so they're going to open up they keep hinting that they might open up the VDP program again, which if they do that and they do it similar to last time, but just at a lesser rate, the VDP program was for claims that had already been paid out and processed. So if you're just in the queue waiting, most likely they're not going to be restructuring that part of the program. So you'll want to just get on getting these withdrawn if you don't think you're eligible. Now, I would say, if you're talking to a tax professional about this and they're not getting into the weeds with you, and you want to pursue the program, but you're just not 100% comfortable on what was filed. I hear a lot of things from other tax professionals who aren't very experienced in this program will throw out things like, oh, well, your revenues were up, you can't qualify. And that's just not how the rules are written. The way that the tests are administered, you've got a gross receipts test, and then you've got a government orders, partial suspension test is what they're called. Those are two different tests. It's an either or thing. You can have a business where the revenues went up and they still qualify for the program because they're meeting the safe harbor requirements under the government restrictions. So if the person talking to you is saying stuff like that, that's not how the rules are written. That's not how the IRS guidance is for the safe harbors. So you just got to watch out for that, if the person isn't really getting into the weeds. Basically, what you're going to want for a red flag on, whether or not the tax professional really knows the rules on this is, are they asking you for your quarterly gross receipts in the same basis that you file your tax returns, cash or accrual basis, all the way back to 2019? And then you do a quarterly test each quarter, 2019, then 20, then 21. So that's the first piece of information they're going to need is that. And then the second piece of information, the question should be, all right, what are your normal operations look like? What were things like during the pandemic? What of the chaos that you experienced as a business during the pandemic was stemming directly from government interference in your operations, from government mandate orders that you had to comply with? that were not suggestions, they were not recommendations, they were things you had to comply with, and that is that level of chaos that was brought in from those government restrictions beating at least a 10% disruption compared to now, when you're no longer in the pandemic or pre-pandemic levels? Can you attribute at least 10% of the chaos in your operations directly from government orders? Not things like customer demand decreases, not things that you were easily able to pivot into a teleworking environment, but things that you just, a rock in your shoe that you could not get around, that was at least 10% of the business when you look at what normal operations were. Or was it, a segment of your business shut down that was at least 10% when you look at, your gross receipts in normal times in 2019. Those are the safe harbors. So if they're not having that detail level of a conversation with you, if they're not, noodling around trying to find some government orders, if they say, oh, you were essential, there's no way you qualify, things like that that's not how it works. I have essential businesses who qualify under the restrictions. It's a facts and circumstances thing. You just need to show that 10%. And here's another point, is that when you go to do the substantiating for those in particular, you just got to watch out. Narratives are weak, right? If the IRS made the safe harbor a 10% safe harbor, to me as a tax professional, I think they could have taken a more aggressive stance, right? Like 10% is not a huge threshold to beat. And so if you had disruptions in your business and that's not manifesting in operational data somewhere, or some kind of constructive, okay, what do we normally do? What did we have to switch to? How did things change? If you don't have something that a reasonable person could plot out on an Excel spreadsheet showing the calculation of what normal looks like and what pandemic looked like, attributable directly to the government orders, and then when you get to the bottom of that, it's showing up at least a 10% disruption. If you can't produce something like that, you're going to have a hard time defending your claim, from what I hear from other practitioners that are facing audits in these areas, that the more that you can have it be like that, you're going to have a much stronger chance. Now, if you can't produce that, but you do feel strongly about it, should you withdraw your claim? Talk to your tax professional about it. Talk to somebody about it who knows this program well, who can help assess your risk on, do you have, what's your risk assessment? Because it is a gray area. Even those tests that I'm talking about, those are safe harbor tests, and those are from the IRS. Those aren't directly in the legislation. And so, it depends on a lot of factors, like what's your risk appetite in the event that you do have an inspection. And then, are you really solidly in a gray area, or are you really not? And then, how well do you think you can substantiate what you have? Can you produce something that a reasonable person, when you explain the argument to them of how you were qualifying, is going to seem reasonable to them? It isn't going to seem like a stretch, and it is going to seem like, okay, here were the restrictions that you had. You had to make these operational modifications that looked like, this, and this. And you can see, like, labor productivity reports was way down, things like that. That's where you're going to have a stronger position. But that's a lot of work, right? And so to just pull your hat out of the ring on the withdrawal program is, that's a big move. And I would say take the time now, right? Because it seems like the IRS is not going to be moving very quickly on these. So take the time now. Do the due diligence work again if it was not done, and see, do you actually qualify for what was filed for, yes or no? And if you don't, no problem. Withdraw the claim. That's why they have this program, because, if you just had somebody who was rushing, or maybe you got pulled in on a weird TV commercial for somebody who wasn't a tax professional, and now you're worried about this, that's what this program's for. You have a way to get compliant. But I would say, even with a lot of those situations, if you did a filing and you're not sure, the first place is to get sure, to figure out what happened.